Hey guys, I hope you're doing well. And if you're watching from China, then Happy New Year of the Tiger, Happy Chinese New Year, Gong Xi Fa Cai, and I hope you will be making some money this year. And well, it has started really with a very bad period in the markets, and last week really was, well, mind-boggling. I had personally a very hard time to make sense of the markets, to explain this volatility, and actually to concentrate on my daily work, such as making these types of videos, because frankly, whenever I found some hints and clues, well, next it changed, the markets bounced up and down, and all of the money managers and other investors that I spoke with were thinking the same, that, well, this is some extraordinary times. And so this is nowhere meant to upselling or something like this, but in case that you require my input or my views, then please consider upgrading your patron if you are already a patron to the $10 tier, where you get access to the patron community, or become a new patron, because this is actually where I will post daily information, what I currently research. And during times like these, I spend most of the time actually researching and actually also consuming content by others to see what they are thinking and trying to make up my mind. And that will be shared as soon as I have it in that community. And well, taking or making those videos certainly requires some more downtime, more quieter periods, and especially more time also to invest in. Otherwise, you can also go and follow me on Twitter, where I also will be more active even during such kind of periods. Now, of course, I don't have to explain to you what have been the reasons for the recent sell-offs. Like in growth stocks, most of them are down minus 80% from their recent all-time highs. No matter if they are US stocks or Chinese stocks, only that Chinese stocks have been maybe front-running this or even exaggerated it even a bit more. But if you see that ARK Invest is now, well, performing less than the Nasdaq on a 3 years period of time, you know that, well, these kind of certain strategies have been hit very hard. And unfortunately, this is also the case for NIO, despite being a company that's been doing very well on the fundamentals, but it couldn't escape these kind of, well, shifts in investor sentiments anymore. And so NIO, not being a profitable company right now, of course, is putting it into a weak spot here with many of the other growth stocks. And well, the market can overshoot on the upside, as we've seen in 2020, but it can also overshoot on a downward trend. And I'm not saying that this is the bottom. There could certainly be even more negative territory. It's really hard to time the market, and I'm feeling that especially during these times, the stock market is actually also disconnected from some of the fundamentals of the companies. Look at NIO now, it's trading at a price to sales, if you consider the sales targets for this year, making around $10 billion in revenues of only 3 or 3.5. So that's actually quite cheap already, especially compared to some competitors. Well, that doesn't mean that this needs to be the ultimate time when reasoning is setting in again, but at least this gives us a little bit of a perspective that NIO is more likely to grow out these valuation pains as they are growing 100% year over year, increasing their revenues. And then if you just keep the current multiple, of course, this will also increase the valuation over time again. Of course, this truly sucks for existing shareholders like me, long-term investors, because, well, we now have to take some, well, step backs here and wait for a recovery, which could, well, take even years. It can be a quite a long time, but it can also be a quick bounce. But on the other hand, this might also be great opportunity for people that are newer to NIO and have just discovered it lately. Now back to the fundamentals of the company. As I'm showing you here, I am in some WeChat private groups of experts living in China that are having locked in their NIO ET7 order. So that has just been done recently, and they got a production date and are estimated that they can get the first hands on the car by the end of March. So that should be according to the timeline, although we have also rumors out there that even the ET7 might be a little bit delayed. I cannot say whether or not these rumors are true. I would say it would certainly help NIO and the stock price also if the ET7 would be delivered on time. Then we also have the update on the ET5 production, the pre-production that is going on. So these are again testing the production facilities to ramp up the mass production aimed for September. So interesting to see this is already happening. And so let's hope just that everything will be in line with the timelines, because actually this also brings me to another point that we've just seen, that Volkswagen in China is actually seemingly going through a very hard time, because as you can see here, the Volkswagen Group sales have taken a hit of minus 14.1% in 2021. And so these are the regions where Volkswagen is selling. In red, this is China, which is down the most. And actually other areas like Western Europe or North America haven't been doing so badly. So the question here is, what is resulting in this huge drawdown here in China? And maybe China here offers us a little glimpse into the future, because China is where we have the most fierce competition in order of the EV market. Tesla is going ahead, BYD is doing quite well, and also the new startups from China like XPeng and Li Auto and NIO, of course, have been doing quite well in 2021. And so what my personal interpretation would be that, well, it seems like this fierce competition is having more advanced products than than Volkswagen actually in China. And well, these companies are not selling on a large scale yet anywhere else except for Tesla. So could this be a big warning sign for Volkswagen and other legacy car OEMs of what's to happen if companies like NIO go overseas and Tesla expand even more? And I do think, yeah, that might be the case actually. And one of these brands particularly affected might be actually Audi, not so much Volkswagen right now, because Volkswagen has actually started selling EVs also under their brand in China and been doing considerably well, while not actually getting to their sales targets in China last year, but still doing much better than, for example, the e-tron sales in China. And so Audi is possibly one of those brands which is a lot impacted now by companies like NIO, possibly also Tesla, and we'll see how this will actually pan out in the next couple of months and also years, because now the ET5 and the ET7 with this new segment opening to the sedan market, and also a new vehicle platform is coming up. And so despite we see all this negativity, for example, around the slowing down in the NIO deliveries, but still they've been growing 100% year on year, while those legacy makers haven't in this category. And at the same time, well, we expect the same to happen in 2022. So let's hope NIO can kind of confirm this traction going forward. And then we'll also see like how this competition will pan out domestically in China between Tesla, XPeng, NIO, and so on, but also going international, where possibly those legacy automakers will increasingly need to bring out their products on the EV side. Otherwise, this shift from ICE cars to electric vehicles will be happening too fast for them to actually benefit in a mass market scheme here. So thank you guys for watching. Hope you have a better week this time, and then see you in the next one.